Assalamualaikum and good day everyone. I'm Nurul and Syafiqah binti Saiful Anuar, the Senior Accountant and appointed leader of Darby Plantation Berhad Account Executive Team. I've started in the accounting field as an accountant in my bank Berhad for 8 years. Today, our account executive team will present regarding the segmental and interim reporting of our company, Darby Plantation Berhad. Before we begin, let me allow the team to introduce themselves first.
Assalamualaikum, my name is Syafiq Azrin and I am the senior accountant for the Darby Plantation Berhad. Previously I worked 3 years senior accounting at FAR570 Berhad.
Hi, my name is Nurul Nabila binti Ahmad Bakin. I am a junior accountant executive. Before I joined Darby Plantation Berhad, I was a management accountant at Sarawak Plantation Berhad.
Assalamualaikum and good day to everyone. My name is Mawaddah binti Ismail and I am a new accountant executive in Darby Plantation. Previously, I worked as assistant accountant at Top Glove Corporation Berhad. I hope I can contribute my skills and knowledge in this company.
Now I will start the presentation with the background of the company. Darby Plantation Berhad is the world's largest producer of certified sustainable palm oil. Now, the company produces almost 2.15 million metric tons of certified sustainable palm oil annually. Darby Plantation Berhad operate in the agriculture sector with major business activities as the plantation of oil palm as well as the sale of palm oil and other related products. The company is listed on Bursa Malaysia in 2017. The company was founded in 2004 and based in Petaling Jaya, Selangor, Malaysia. The vision of Darby Plantation Berhad to be a leading multinational corporation delivering sustainable value to all stakeholders. Darby Plantation Berhad also have 4 missions that they are focusing on, which is: first, develop a winning portfolio of sustainable business. Second, subscribe to good corporate governance and high ethical values. Next, deliver superior financial return through operational excellence and high performance standards. And lastly, provide an environment for our people to realize their full potential. That's all about the background of Darby Plantation Berhad. I will pass to Syafiq Akmal to explain more about factors to consider having a segment reporting.
Factor to considering having segmenting report. There are 3 characteristics that having an operating segment, which is described in paragraph 5. However, the company can produce report in which the business activity are presented in a variety of ways. Number 1 is nature of business activity. Business activity include any activity that will fulfill the primary purpose of making profit for the company. The generator that encompass all the activity that are being carried out by the company. Company main business comprise industrial, models, logistics and healthcare. Number 2, the existence of manager responsible for the activity. Segments such as plantation, property and others have their own manager to control the segment. This is to ensure that they can maintain their performance and have direct contact with the Chief of Decision Making, CODM. Darby is a large company and it operates in various divisions. These divisions are monitored by a managing director to control its performance and reported to the top management. Number 3, information presented to the Board of Directors, BOD. Chief of Decision Making use the information accessed by the Board of Directors to decide how to allocate their resource and evaluate performance, as it can contain reliable information regarding the overall performance of the entities such as financial statement. So the Board of Directors will be able to determine whether the segment need to continue or not in order to give value to the company.
We will be discussing 2 types of segment, which are business segment and geographic segment. Business segment is the section of a company that makes income through the sales of a product unrelated to the main area of company's focus. Segment comprise upstream Malaysia, upstream Indonesia, upstream Papua New Guinea and Solomon Island, downstream as well as other operations. Firstly, upstream Malaysia focus on developing, cultivating and managing oil palm and rubber plantation estate and mining of fresh fruit pastures into crude palm oil and palm kernel, processing and sales of rubber. Next, upstream Indonesia focus on developing, cultivating and managing oil palm plantation estate and mining of fresh fruit and pastures into crude palm oil and palm kernel. Upstream Papua New Guinea and Solomon Island focus on developing, cultivating and managing oil palm and sugarcane plantation estate, mining of fresh fruit pastures into crude palm oil and palm kernel, refining of sugarcane, coconut oil, cattle rearing and beef production. Meanwhile, downstream production and sales of refined oils and fats, which include specialty and end-user oil and fats, sales of crude palm oil, refining of coconut oils, production of biodiesel products, sales of derivatives and crushing of palm kernel to crude palm kernel oil and palm kernel expeller. Other operations including trading of agricultural products and service, production and or sales of oil palm seeds and seedlings, sales of oleochemical products, research and breeding programs of oil palm and rubber with special focus on genome science, and renewable business with a focus on development of green technology and renewable energy, which include bio-based chemicals, biogas and composting. Next slide, we will be discussing geographic segment. It can be defined as a method of marketing products to customers based on their geographic location. Segments by geography include Malaysia, Europe, India, Indonesia, Thailand, other countries in Southeast Asia, South Africa, Papua New Guinea and Solomon, China and other countries.
Next, I will discuss about Chief of Decision Making by introducing our chairman, which is in charge as non-independent, non-executive director Tan Sri Dato' Sri Haji Megat Najmuddin Datuk Sri Dato' Haji Megat Has. CODM is one of the most important of all management activities. The decision-making role is the heart of the executive activities of the management. The quality of decision are highly dependent on organizational management, as it is to make sure all the operational activities run smoothly. Tan Sri Megat brings with him a wealth of experience in both the private and public sector that span 5 decades. The decision maker made by the CODM is essential inside the Plantation, as it is responsible for promoting, together with senior management, good corporate governance culture within the group, which reinforce ethical, prudent and professional behavior. It is also in charge of review and adopting a strategic plan for the group. He has to review, challenge and approve management's proposal on a strategic plan for the group by bringing the objective and breadth of the judgment to the strategic planning process. Next, he should ensure the strategic plan for the group supports long-term value creation and includes strategies on environmental, social and governance, economic as well as safety and health consideration underpinning sustainability. He has to play a big role in overseeing the conduct of the group's business, including the formulation of strategy and performance objective, controls and accountability system, risk management practices and human capital management. Last but not least, he is in charge of reviewing the adequacy and the integrity of the management, information and internal control system of the group. He has to make sure that there is a sound framework of reporting on internal controls and regulatory compliance. He also has to verify the quality of the group's financial reporting process, system of accounting, as well as the integrity of the group's financial and non-financial reporting.
Process to identify reportable and non-reportable segment. Okay, the reportable segment in the report must exceed 10% of the quantitative threshold, whether it is in revenue, profit or loss, or asset. In the revenue part, the external and internal revenue combined, and the threshold must be equal or more than 10% to be recognized in the reporting statement. For the profit or loss, it combines the report of profit or the report of loss to determine whether it is over 10% or not. While for the asset, it is the same as how we determine the revenue. If the segment does not fulfill 10%, it's either it will be reported as all other segment, or it may be combined with other segments that are similar, that have similar and are also below 10% threshold.
As you can see on the screen, this is the annual report issued by Darby Plantation Berhad for 2021. The total of external and inter-segment is RM18,695,458,000 is used to measure 10% of the threshold test. The next slide, you will see that there are 4 reportable segments and 1 non-reportable segment. As per calculation, the reportable segment are upstream Malaysia, upstream Indonesia, upstream Papua New Guinea and Solomon Island, as well as downstream, has produced 16.59%, 10.06%, 11.64%, 60.19% respectively, whereas other operations are indicated as non-reportable segment that have produced 1.51%, which is below than 10%.
After we are done determining reportable segments, we must do segmental analysis through the 75% threshold test. Thus, it can be resolved by total external revenue of reportable segment divided with total revenue and times with 100%. As shown in the table, after applying the 75% threshold, the reportable segments that we gained were less than 75%. Some Darby Plantation did not reach the 75% threshold test because the upstream Liberia discontinued its operation and disclosed in Notes 32C Roman 1. In 2019, the board of directors had approved the group's of intention to exit the upstream business in Liberia, and on 15 January 2020, the disposal of SDP Liberia was completed, and a gain of disposal of 73.8 million was recognized in the consolidated profit or loss as disclosed in Note 32C Roman 1 to the financial statements.
Thank you to the previous presenter. Now I will continue to explain the advantages of segmental reporting. The advantages include the separation of profitable segment. Transparency is one of the most important benefits. Some Plantation Berhad has several categories of business operation. So, the segment reporting can disclose which area are profitable and which are drained on the bottom lines. Thus, the company management can take various steps and initiatives to maintain the segment profitability while increasing the profit of other segments. For example, the evaluation could prompt a change in strategic direction for the managers to make a future decisions. Next, give a better understanding of the financial statement. Segment reporting enables the company shareholder to gain a better understanding of the variance that may affect overall numbers. For instance, the report showing where does the earning coming from and can help the shareholder to determine whether the earnings are sustainable or instead. Hence, this reporting is intended to assist the investor. Another advantage is lower cost of capital. The risk of investing in the stock of a firm that reveals all information is theoretically lower than the risk of investing in the stock of company that withhold the information. For example, when the company faces the financial risk problem, our company's cash position and liquidity as well as the working capital requirement were closely monitored and assessed, and appropriate strategies were undertaken to address emerging liquidity pressures.
The disadvantages of segment reporting. Okay, number one, it is based on segmentation. The basic problem arise in segment reporting is division of a diversified company for segment reporting purpose. Every base have segmentation may create segment differently and it causes identification of segment. Number two is disclosure of cost. Okay, segment reporting also involves cost of disclosure. The provision of additional information along with the routine information increase a firm operating cost in terms of cost of collection, processing, and cost of management control system. Cost argument is also related to increased competition that may result for segment reporting. Number three, managerial conservatism. In the absence of some regulatory provision to disclose segment report, a voluntary disclosure are likely to be perceived by the manager to be beneficial only in certain situations. For example, management will do the segment reporting when they believe the company attractiveness can be enhanced.
Next, let's move on to interim report. According to IAS 34, each financial period is treated as a separate entity in terms of accounting standards. As a result, accounting principles that apply to intermediate period should be consistent with those that apply to yearly periods. There are two most common approaches to interim reporting. The first method is discrete method. It can be defined as when each intermediate interval is a standalone reporting period. The second method is the integral approach. It can be defined as each interim interval is a continuous reporting period. The interim financial report is unaudited and should be read in conjunction with the audited consolidated financial statement for the financial year ended 31st December 2020. Some Darby Plantation is using discrete method to prepare their interim reports. Interim financial reporting was prepared on a quarterly basis, which is a practical basis of 3 months. This interim financial report is prepared in accordance with the requirement of paragraph 9.22 of the main market listing requirements of Bursa Malaysia Securities Berhad and complies with the requirement of the Malaysian Financial Reporting Standard MFRS 134 Interim Financial Reporting and other MFRS issued by the Malaysian Accounting Standard Board. Some Darby Plantation Berhad is currently using two types of accounting policies in preparing the interim report, which are property, plants and equipment as well as inventories. I will explain regarding PPE used by some Darby Plantation Berhad. Property, plant and equipment are measured using a cost model in which the use cost is less accumulated depreciation and accumulated impairment losses. This is accordance with MFRS 116 Property, Plant and Equipment. In addition, some Darby Plantation depreciate their assets over their estimated useful life using a straight-line method.
Another accounting policy used in preparing the interim report is inventories. Inventories comprise palm oil product, sugar stock, coconut oil, raw materials, trading, inventories, consumable, and spare parts. The fair value of biological assets harvested from the groups on plantation and sold during the financial year are recorded as part of the biological asset movement in Note 18 and as part of fair value changes in biological assets in determining the profit or loss. Inventories of some Darby plantation will be measured as at the lower of cost and net realizable value. This in accordance with FAR570 inventories. From the interim report, we can see there are 5 types of interim report prepared by the Sam Darby Plantation, which are unaudited condensed consolidated statement of profit or loss, unaudited condensed consolidated statement of comprehensive income, unaudited condensed consolidated statement of financial position, unaudited condensed consolidated statement of changes in equity, and the last one is unaudited condensed consolidated statement of cash flows.
The financial year ended for Sam Darby Plantation Berhad is on 31st December every year. The period for the current and comparative of each statement prepared by the Sam Darby Plantation Berhad are according to the MFRS 134 interim report that will be measured from 1st October 2021 to 31st December 2021. It is equivalent to the 4th interim quarter of Sam Darby Plantation Berhad in 2021. For statement financial position, the current interim period is 3 months, which is from 1st October 2021 to 31st December 2021. Meanwhile, the comparative period at the end of immediate preceding financial year is 12 months, which is from 1st January 2020 to 31st December 2020. Next, for the statement of profit or loss and other comprehensive income, the current interim is 3 months, which is from 1st October 2021 to 31st December 2021. And for cumulative year-to-date is 12 months, which is from 1 January 2021 to 31st December 2021. For comparative current interim is from 1 October 2020 to 31st December 2020. Meanwhile, for comparative year-to-date is from 1 January 2020 to 31st December 2020. And lastly, for statement on changes in equity and statement of cash flow, the current interim period is 12 months, which is from 1 January 2021 to 31st December 2021. Meanwhile, the comparative period is from 1 January 2020 to 31st December 2020. I think that's all from me. I will pass to the next presenter. Thank you.
Okay, the first adjustment. Okay, on 1 January 2021, Sam Darby Berhad had an ending inventory of 1.569398 billion. On 31 December 2021, Sam Darby Berhad inventory amount was 2.466 billion. Okay, the inventory price will change every year. On 31 December 2021, the net realizable value (NRV) of the inventory was 1.908 billion. Okay, so the solution for this adjustment is on 31 December 2021, the value of the inventory should be recognized as at the lower between NRV and cost. Since the NRV is lower, which is 1.908 billion compared to the cost, which is 2.466 billion. Okay, so the NRV will be recognized in the as of SFP. Okay, the loss of inventory, which is 558 million, should be recognized in the statement of profit or loss. For the second adjustment, on 1 January 2021, Sam Darby Berhad plant and machinery was 4.689118 billion, with the accumulated depreciation 2.798864 billion. The company depreciated all of its plant and machinery on straight line basis at 20% per annum on yearly basis and none in the year of disposal. Okay, on 1 October 2021, Sam Darby Berhad decided to dispose of its old machine with the carrying amount of 150 million. Okay, with a profit of 50 million. Okay, the machine was initially purchased by the company at a cost of 300 million. On 31 December, the company acquired a new machine at a cost of 800 million. For the solution, the cost of disposal machine will be minus from the total cost and also followed by its depreciation. And the new acquired machine will be added and there will be no depreciation because it acquired in the last day of the financial statement. Last but not least, here is the extract of the statement of financial statement after the adjustment. Okay, to prepare this statement, we are required to record based on which of the current interim and comparative. The current interim refer to the current quarter, which is the fourth quarter which is from 1 October until 31 December. While the comparative refer to the period of the statement of financial statement at the end of immediate preceding financial year. In this case, which is the year of 2020. That's all from us. Thank you.